The much-awaited package from the government and the central bank to rescue the sliding rupee has proved to be a damn squid. Dashing the hopes of both equity and debt markets, the central bank announced measures that are unlikely to have a significant impact. The RBI has hiked the limit on foreign investment in government bonds to $20 billion. It also has allowed companies in manufacturing and infra sectors to raise up to $10 billion abroad. But the markets clearly are not impressed. The rupee erased all the gains it made in the morning, dipping below 57 against the dollar. The rupee ended today at 57.01, so from 1.2% of gains today, it just is about 0.2% that the market closed on. Let's also get in Subramaniam Sharma. He is Director of Greenback Forex Services and he joins us in the studio. Mr. Sharma, hi, welcome to the show. How have you read the RBI measures? Markets, of course, are quite disappointed with what RBI has done.
I think the market had built up a huge expectation over the weekend, especially when the finance minister was on his way out. Market expected that he may give in something very large, especially to boost the sagging sentiment, which has been the biggest driver for the market, both the equity and the currency market to fall. But the measures which came in were nothing major, which is actually bringing the much required inflows. In fact, today the biggest factor which is driving the rupee weakness is lack of flows, which is keeping the demand on one side but no supply. So I think the expectation which was built up over the weekend fell flat, and market overreacted, and I think the rupee went back to the level from where it started on Friday closing. So it was I think a disappointment which led to the sharp fall.
Mr. Sharma, we're back at 57 on the closing today with global risk aversion and nothing coming in from RBI yet again. What kind of a level would you see in the markets tomorrow?
I think now that some hopes got built in which was not lived, I think we may see the rupee trying to go again to the level what we saw last week. In fact, last week we had another set of disappointment when the Reserve Bank governor did not announce any rate cut, and we saw the rupee fall very sharply, and rupee weakened almost by 4%, losing 2 rupees. So I don't know whether we could see a similar situation today with this disappointment, whether we could see a similar weakness. But definitely I think there's that lack of confidence, lack of weak sentiment all is driving, and I think we are going into uncharted territory, rupee testing new lows. So I think we should be a bit, we should look to see what's happening now.
Mr. Sharma, would you think that RBI might come out with another set of measures, because what they've done today has been quite less? Markets were expecting a dozen of measures coming in, but we can count it. It was 3 or 4 that came in today.
I think, see, the measures, it need not be numbers. It should something, even a single measure could be strong enough to build up the confidence. Something which should take the shackles and restriction which will help the money to flow in. I think it is beyond RBI which is required. I think from the finance ministry side, we saw the measures like the GAR and the retrospective taxation, which is having its impact. Then the other factors from the global scenario overall is negative. At this point of time, I think we have to address a lot of issues at home, addressing the current account deficit, the fiscal deficit, all those things have to be addressed. So each one has to play the role, and the combination of that is required to change the sentiment. And once the sentiment improves, the rupee can correct with possibly all the longs which have been created may get triggered, stop loss may get triggered, and rupee can move in a big way. But as of now, I think the sentiment or the confidence building exercise is very critical now.
And the only place where the funds seem to be flowing is the dollar index, Mr. Sharma. So do you think there's more gain coming in for that?
See, the dollar index has been moving for a different reason. We are seeing the euro also not sustaining the gain. We saw a sharp rally last week. It went up to 1.27 level. That didn't sustain. We saw it retracing even today. Now it's broken below the 1.24 level. So I think that is giving a boost to the dollar index. I think this time possibly we may see the dollar index breaking the 80 to 80 levels and going toward the 83. But definitely I think the euro weakness will have a bigger role to play, and we can possibly bet on the dollar index. Of course, if we with a stop loss, definitely I think the dollar index should this time possibly move above the 83.
All right, Mr. Sharma, thank you so much for that. Let's also get in Vijay Bambani for a technical analysis on what the rupee has done today. He is CEO BSPLindia.com, and he joins us right here in the studios. Vijay, hi, welcome. We've seen a huge range today, 56.40 to around 57.10, almost that. How have you read it?
Well, Manisha, I would stick to my earlier stance that 57.65 to 57.80 would be the level I would watch out for. And should that be taken out, I think 58.5 is a place to go. I think the long dollar short rupee trade is still on, but it's showing signs of fatigue. I think beyond 58.5, the dollar will find it difficult to keep appreciating at a trajectory that you've seen in the last couple of months that it has shown strength thereof. I would feel comfortable even going short on the USD above the 58.5 levels in the July NSE future series. But that would be a very, very calibrated and very laid-back approach. I don't think that is something that a day trader would want to do. But having said that, for tomorrow, I think 57.80 or 57.85 is what I would give the USD INR tops.
We haven't seen, we haven't seen much of a strength go on in euro. That has seen a very sharp decline as well. So that would, of course, be complementing the decline in rupee. But how about the dollar index? I mean, that has held on 0.25% of an upside even now.
I think the dollar index is on its way up, and it's likely to hold its own because of the safer haven buying that you're seeing in the USD. And right now there seems to be no alternative to the dollar. So I think it's 82.85 level is the first minor resistance, above which 83.45 or 83.50 would be the level to watch out for. Should it see some kind of profit sales, and should the prices decide to go down, 81.85 to 81.90 levels is where support will come in.
And the final word, Vijay, on the euro, because that has seen a sharp decline. It's the Italy and Spain bond auction today, and you also have the EU summit starting on 28th of June. So ahead of that, would you see further declines?
I would maintain my view that 1.21 is a support to watch out for. I don't see the euro going down unless you have another trigger which has not so far been discounted by the market, another surprise bad news which has not been out in the public domain. I think 1.21 holds for now.
All right, so 1.21 for the euro, 82.85 for the dollar index. And as far as the rupee goes, you might be looking at a further decline coming in. And as Vijay says, on the charts, looks like 57.80 is the next resistance up there.